What's up, everybody? Good morning. Starting off the day pretty nice. VIX finally pushing below triple B. I like to see that. Great way to see the market tidy up. Could be a squeezy Friday. Complete the run up. We'll see if this is the day. How y'all doing? Good morning. Rational open again. Things looking pretty nice. Taking a look at the opening news, anything interesting that could make the market go to Michigan inflation numbers coming in 32 minutes. Could be a market mover, could be a non-event. Inflation's numbers across the board, PPI and CPI are showing that things are stabilizing. So I don't expect that to come in very crazy.
Talk to me honestly.
Tech funds are seeing $3 billion inflow, largest since December 2021. Financials seeing $2.1 billion outflow, the largest since May of 2022. Huge sector rotating into the large mega caps that are lifting the stock market. You can see the deviation. Nasdaq is going higher up than the S&P, and that's that rotation. Easy to see that. Talk to me honestly. I love this song. It's actually ready to get amped up in the morning. I'm also like really digging this like cover playlist that I found from Lo-Fi Geek. And I always play Lo-Fi Geek, but I know somebody said yesterday they heard like 6 Billie Eilish songs in a row. All right. That's not necessarily a bad thing. She's a pretty good artist. That seems to be a very chill playlist. I like the covers. While I was at Disney, you listen to old live streams so you can get into the trading mood. That's Barb. That's hardcore as shit. Impressive. I should start doing like crazy streamer stuff. I'm like crazy streamer like amp out. They get up and like pound their hand on the desk when they get a good headshot in a game or something. Get everyone amped up. Let's go! Let's go! I should be more foolish on my streams and amp you guys up and shout and scream when I win my trades. Just some animations. Make it like a gaming stream. Every time I get a trade, it's like fireworks go off on the screen, explosions. I have a car driving off a cliff every time I lose a trade. So maybe you should change the format. Oh, market's open. Let's get ready to go. Inside DD bands across the board, things are looking good. Right at triple B on VIX, things looking stable. Hopefully no pivot overshoots today. Let's go. Michigan numbers coming out in 30 minutes. Could be a market catalyst, to be prepared for that. Let's see what we get on the open here. We should have a new release. Those come out today, but I added like 5 more things to it last night in a meeting. Might push it out to Monday. There's a lot of changes. You guys are gonna like it too, for sure. Our resilience numbers coming through. Positive, positive, looking good. I like what I see. Looking pretty solid. Right in the middle of the stuff here. Looking good. Okay, let's take a look. Resilience is positive. We could get a type 2 resilience. Would be really nice. That comes through. Oh, a gap and go on the open side. Resilience 60, 29. Things looking really hella good. Hella good. Okay. Let's come through. The ED bands are going to be up here somewhere. We could get that gap fill today. Oh, this is perfect. Hedge pressure balance, bull long up, golden setup. Yeah, let's do it. I love it. Okay. We probably taking a position in ETF today. I do like what I see. Those resiliences, hopefully they hold the fort. Let's see. QQQ, BSU. Let's remind you guys what BSU looks like. So it's something really small on the table. So far, I like what I see. I'm going to take one entry. I'm going to enter in really heavy. It hits the bottom. BSU. BSUs are also bullish setups between the two monthly hedge pressures. Obviously, you can see now that. Today, we have half gap and bull zone S support. So this can be nice and tight. If we do get a hedge break on NASDAQ, that'd be great. Now, we are limited to the upside because there's NASDAQ resistance there. So be very careful. We're going to have to get a hedge break to get this guy moving. Let's look. Something small. Things are looking great. BSU, also interesting here. There is no resistance. There is no irrational signal that can come in. This is looking okay. Things are looking steady across the board. I do like what I see. All right. That's good. Okay, remember, it's nice and tight. Everything's nice and tight. That's great. Michigan sentiment numbers. So remember, it's a catalyst possible. Take a look at those really quick. Or sorry, the not typically a big driver, but you always have to be on the watch for that. Okay. Things looking stable. Let me double check out all my gaps set up. Check and understand where all my gap fills are. Picking price targets video on the outlet of your trade. You have to know where you're going to exit. So I have gaps. Anything down here to look for? Nope. We're good. We'll check QQQ for gaps. Russell's pushing higher and Nasdaq's looking higher. That is phenomenal. I like it. I like what I see. Long in both accounts. Right out the door. Bull long up. Golden setup. Good. As long as the Giants holds the fort. It's breakout day. Can't argue with that. The catalyst, the only thing can bring us down. And QQQ breaking out to highs. I love what I see. Like I said, pretty good. Let's go for one more. Clone. Make sure you get all the gaps here. Yeah, that's all good. Nice and fine and dandy. I'm keeping an eye out. Why's my resilience? Oh, there it is. I was like, I'm on the daily chart. Okay. Just making sure I'm not missing anything. It does look like it filled. And then it's a quick out if I'm wrong. If it's a hedge break, I'm out. Stable. DD's coming down just a little bit out the open here. And keep an eyeball on those. So we're gonna look on here for. Let's look for stocks that are in illiquidity pockets. See if there's any runners today. Is this Coldplay? That's a cool version of this. Let's see what city is looking at, because banking is the weaker sector. I would assume from what I'm reading. Let me double check. This is all your pre-market stuff. If you guys don't know how this works, energy's down. Financials not down so much. So XLE. Let's double check energy really quick. That is what is slowing down the S&P relative to the others. Nasdaq is going up. IWM's going up. Let me check those really quick. So XLE is a gap up today. Okay. Double check any craziness on IWM. So we are mean reversion in IWM. So there is also hedge pressure support inside of here. Wall to middle is random. So this will be a random touch if we do interact with there. Just be careful today that Russell doesn't drag us down if we do break. So QQQ hedge break to the upside looking pretty nice. Bring up gold. Okay. Sorry, talking about our new release. So I told him to push it live for tonight. So DD's coming down just a little bit. Everything's looking nice and stable. You said look at gold. Okay. GLD belong up in an illiquidity pocket. So gold has a pathway from here to here. So this is an upward momentum. So this is called illiquidity pocket. Raz still... Oh, Raz is actually tanking pretty hard here. Let's take a look at this. It's not the Russell. What is it that's pulling things back? Just the S&P alone. Okay, so now we're at oh, this could be bad. Okay, be careful if resilience does go really negative. Now, don't worry about the Nasdaq one. Just keep a look on the SPY. Nasdaq's not going to pull the SPY down when markets are rational. So just keep a look on SPY zone integrity. So Nasdaq was trying to break hedge pressure to the upside. That was what I said earlier. We have a hurdle and you have to bet on a hedge break to get out. So SPY is the one that's the caution today. Hedge pressure's inside the redistribution zone. That's always a scary thing. When hedge pressure's in the redistribution zone, resilience being negative, gap fill can break hedge pressure. So that's something to be very careful on. I have a video called Resilience Can Predict Hedge Pressure Break. Because that very phenomenon. As long as SPY resilience is positive, we're good. Markets are all rational. Things are nice. Index divergence is starting to kick on. Be cognizant of that. And we're going to probably not do anything big until those numbers come out. Discord put out a press release, I think yesterday. Or was it a couple days ago? Let me see really quick. Some changes they're doing. Maybe I'll sell that. On May, oh no, not last. May the 10th. So they're going to be changing usernames on Discord. They're not really saying why, but let me tell you why. I sent the CEO a message of Discord. Ashton sent me something today. He's like, didn't you message the CEO and tell him to change the names on Discord? I was like, oh yeah. And I even tweeted it. And everyone on Finswood to retweet it. Post went pretty big impression reach on that one. Got a lot of impressions. I wrote the CEO himself a letter to explain how Discords are being used with identity duplication, like duping like the fake maths and stuff in Discord. And I let him know. I said, you guys, y'all started in gaming. They started Discord, I think, like whether just to play Final Fantasy online. I was like, you guys in gaming, nobody's gonna try to scam each other in a Discord related to a gaming stream. What are you gonna do? Convince someone to buy your merch or something? Like, this is gamers. Like, nobody in a gaming Discord is gonna come to you pretending to be a crypto hedge fund manager and convince one of your Discord users to, invest in a crypto scheme. And I said, on a daily basis, we deal with billions of dollars of fraud, I bet, combined with all the people in finance. You guys are really oblivious to that, probably because you didn't know Discord has become, the platform for financial, communities. I wrote a huge letter and I explained like maybe 10 different problems and ways they can fix it. And then within a week, they released a press release that they're getting rid of the 4-digit identifier at the end of the name, because I mentioned how that was one of the things that causes the problem. You see DT, like DTV or RS or whatever, Matt, they come in at whatever name they use to mimic mine. Discord has a pound sign and then 4 unique identifying digits that come after it. So most people don't know to check those 4 digits and that they're different, right? I mean, it's obvious if you use Discord that it's a unique identifier. There could be RS_Matt in 9,999 of them. You wouldn't know if you get in Discord the first time. They use my picture. It looks like you don't know all the signs. So I basically wrote a letter to them explaining all the ways people get around and circumvent this thing causing a big security problem. And I mentioned to the CEO, it is a liability to Discord in such a way that, they would understand that the Discord user base ultimately could consider that liability worthy of a class action suit to force them to make that change, right? I didn't say those words, but when you talk to the CEO about something like that, and somebody talked to me about that, you would understand as an owner of a company that the user base, the goal of a class action suit is to get a change, right? For the most part, not to get like financial reimbursement, but to like force them to make the change. And I said, the user base is starting to come together and collectively complain about this. And these are some things you can do to fix it. And then a week later, Discord is making a lot of changes. So it makes me feel like we were heard. So all of you that banded together to help us get that message across. Thank you guys for that, because we're going to be fighting those fraudulent Discord names at the end of the day, one by one. And I wrote Jason himself. And of course, the press release isn't addressing, like, again, could be coincidence, but the timing's great because that's exactly what we asked them to do. And they're not saying, well, we're fighting fraud in the financial space. Clearly, it's not something they're gonna, raise awareness on, publicly. But they're saying, well, this is why we're doing it, because it's better here and it's better. It's better because it's gonna fight those fake, phony accounts that are gonna send you a message in the background. You know what they're doing? They message you immediately asking you, the very first thing you do when you join my Discord, they have somebody already in our Discord, sees the member list, and then they use this other account to message you that looks like me, and it says, hey, due to security issues, we're asking you to turn off all direct messages from people inside of the server so that people don't message you and scam you. Thank you for it. And they send you pictures and instructions on how to do it. You fell into the trap because I can't send you a message to warn you about that. They immediately isolate you to where they're the only ones talking to you, and then they condition you into depositing money to some crypto fund or something, whatever they're doing. It's some crypto exchange or some crap. Telling you to turn off DMs. Hey, this is Matt, blah, blah, blah. Turn off DMs, by the way. We're helping warn everybody that there's, oh my, like, they're getting so smart. So they're so smart. And so if my unique identifier was rocket scooter underscore Matt, no one else could have that. They'd have to be like in Twitter. They'd have to go spell the name slightly wrong or whatever. But here they go in there, RS underscore Matt, and they can make 9,999 versions of exactly my name. Also, there's a character that puts two little T's together, and it's actually one character. It looks like two T's. So now not only can they generate 9,999 of rocket scooter underscore Matt, they can generate another 10,000 more with that character that looks like two T's. And so I even told him, like, why do you allow special characters in your names? Like the liability. And I get it, like, it's a gaming Discord. Nobody takes gaming seriously as far as like fraud goes, right? It's like, oh, well, everybody, what do you want your name to be? Like explosion, rocket ship, scooter, you know, like, okay, let's just let this guy use a bunch of emojis. He's a gamer. That'll be cool. Kids will love that, right? But then it's like, if your product is being used by adults in a financial space, it's a little bit different, right? You don't think of those things because you're not thinking broadly about the application of your product, which is totally fine. It wasn't designed to be used in finance. It wasn't designed with security in mind. They didn't design Discord thinking that would be a vehicle for fraud. I mean, they designed it just to be a cool place for you to screen share and communicate with your friends while you're playing games. And so as Discord evolved, it didn't evolve for them to understand how big. I bet you they didn't think how big they were going to get. You know, they've taken over the world for the most part. And now that it's everywhere, you know, they're starting to have to really hear from the community how bad it's getting. You know, in Twitter, there's a fake Matt that appears every week. And they usually just spell it wrong. And if you fall for that and the spelling's wrong, then you're just dumb. No offense. You should, you know, if somebody's calling you on the phone, you should know that phone number is that person. That's a spelling error. Everyone says, hey, Matt, there's an account that's messaging me. I think it's a fake account. And I go, you think? That's spelled wrong. Like, how do you think? You think I'm going to go create a second account and spell my own name wrong? Like, don't waste my time with that. Like, telling me you think it's a bad. Of course it's a bad account. Don't even think, no. Like, even with it spelled wrong, people are still convinced. Now, you just can't fix stupidity at that point, but that's where I'm like, don't, yeah, of course it's wrong. Like, what incentive would I have to go out there and make a brand new account, copy my old one, it's got 100 followers on it, and then message you out of the blue when I've never talked to you before? It's, like, don't even waste my time reporting that to me. Report it to Twitter, right? Yeah, crypto in general is just dumb at this point in time. Crypto has no value, no utility in this planet right now. There's no reason to invest in. I'm not telling you what to do. There's zero reason to invest in crypto. Zero. Unless you want your money to sit there for 20, 30 years and pass your gains on to your grandkids, that's fine. All right, so be careful here. Fuck. Resilience still hanging in there. Crypto is like it's like investing in the internet in 1994. It's probably the best decision you'll ever make, but you didn't make the money from that until 2015. And you went through 2 recessions before you got it. You know what I'm saying? Everyone's, I wish I would have bought Amazon back when it was still a book company. Yeah, you would have bought it when it was a book company. You would have held through the .com crash and it would crash to zero. You would have rallied through 2007, 2008, but it crashed to zero again. You would have held through all of that so that you can cash in your billions of dollars. Careful here. Careful here. No good. I don't like this. No good. You know what I'm saying? That's why nobody emerged as a secret millionaire, because they went in and bought Microsoft in the early 90s. Because you had to go through a bunch of recessions to make that money. And the utility didn't come until 2010, 2011, 2012, when everyone's ordering stuff on Amazon at that point. Internet was everywhere. Widely accessible. Your grandma used it, right? So, long story short, crypto is digital currency may be the future, but again, trading is not just about being right, it's about being on time. It's too early for that to be the future. It's the future. It's the distant future for sure. A lot of hurdles for it to become good. Until your grandparents are buying their medication and a loaf of bread from Kroger using Bitcoin, that shit's going nowhere until the stock market recovers. It is not a widely useful thing. That's the same thing in the internet, right? When you bet on .com companies, they didn't become the leaders of the stock market until everybody used it. Everybody. It needs to be widely accepted. And crypto being an enthusiast thing only is going to be rallying in hype after all the safer things have rallied first. It's a risky asset. People diversify into the end of the chain. That's going to be the last thing that rallies and recovers in this environment. So if somebody's asking you to invest in crypto right now as a day trade and showing you a chart or something, it's just, you're getting scammed. Somebody is trying to talk to you about the utilities and things of crypto. You understand that it's not there yet. And you're just dumb. And you're investing in something because a stranger messaged you on the internet and told you to. And stupidity should not be rewarded. As a matter of fact, the universe will punish you for that. You'll learn a lesson. Same thing happened to TikTok, Instagram. Fake accounts spring up pretending to be content creators and ask people to contact them on WhatsApp for investments. Yeah, and that's what people don't understand is that the only industry that really happens in is finance, because people go, wow, this guy from TV messaged me. Oh yeah, he's the guy that shouts bye 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 on TV. Oh, he messaged me. That's so cool. Yeah, like he's asking me to invest in his fund. Oh wow, that's so cool. I'm so starved. That'd be like Brad Pitt messaging you to ask you to star in a movie and you were a struggling actor and you were desperate to get into play or get in a scene and get anything to your name. It's the same thing. You're like a struggling actor, never got your break. You're desperate to get ahead, and then some fake Brad Pitt message you on Instagram. Hey, why don't you meet me in this dark alleyway? We're filming a scene. It's really me, I promise. Like, here's a picture of me. Oh shit, it is him. I guess it's him. Well, let me go meet him in this dark alleyway, and we can film this scene. You get there. Oh, why do you have a gun? Oh, you want my wallet? Oh crap. You're not Brad Pitt. You know what I'm saying? Like, it's the same thing in that industry. If you were to get, like, nobody does that, scams you to be in a movie scene, but you think about the desperation you'd have if the trading or finance mega star wrote you on Instagram when no one writes you on Instagram asking you about this amazing investment opportunity. You watch them on TV, of course you can trust them, and then it's not really them. It's crazy. I'm just hanging in. My trade looks kind of okay. Resilience needs to hold in there though. Be very careful here today. Got those numbers coming out in 7 minutes. Oh, the real RS Matt joined June 7th, 2016. They can't fake the join date, as Andrew has said. Yeah, there's a million things that should happen. This is a lesson to everybody. Anybody that's messaging you, number one, I'm not going to ever message you. That's one thing for sure. We have a rule in Discord. There's no DMs. As a matter of fact, I get mad at you if you DM me. Unless it's an emergency, like you can't get into your account or something like that. That's okay. But if you want to DM me and talk about the stock market, and DM me and ask me about a ticker, and there's 4,000 people in our Discord, 5,000 people in our Discord now. So that just floods my inbox to where I can't see the emergencies. So that people are like, hey Matt, there's a guy pretending to be you. Okay, message me. But if you're like, hey Matt, what's going on? If you're my friend and you want to talk to me, just send me a text. It's different. But in Discord, I say no DMs. Because of that, we can't have a DM policy. I have to really kind of yell at you. No DMs to anybody. Nobody's going to DM you. Don't DM me. Don't DM each other because of that. Just because we have to kind of axe that, because people are out there trying to get each other to hand over their money. So I say in our rules clearly, don't DM me. I won't DM you because of that, because of Discord, because of that problem. So don't ever DM me. Just send me a text if you have my number. That's better. Like somebody DMs me and goes, hey, what do you think about Bank of America stock this week? I'm like, don't DM me. Put that in public chat and we can all talk to each other there. We can police that. Like if you DM the wrong person, you're like, the Discord doesn't allow that security. And so now it can. Now you guys can probably DM me now after that. A little bit easier because it's like you're not double checking, right? And you can get a random DM from somebody. You can pretend, oh, that's Matt just continuing to talk to me. And it can be, oh, that's the fake account. They literally lurk in all these Discords. No clue how successful they are at it, but the idea is that they keep coming in droves. They must be very successful at it. It must work. I have 2 friends in real life that fell for the crypto scam fake accounts, and it was through Instagram. It wasn't through Discord, but it was very similar. And how did they fall for it? Well, again, I hate to say it, my dumb friends don't check the spelling. You get so hyped and excited about an opportunity. I can't blame. It's certainly not my fault. And the shitty thing is they message me to tell me about it. And that's even the worst part, because I'm like, what do I say to my friend? Hey, I'm sorry this happened to you. Why are you bugging me about it instead of the police, though? Just because they pretended to be me. It has zero to do with me. I feel sorry for you, but I don't feel sorry for you because why did you do that? You thought it was me. Well, have I ever talked to you about crypto before? Have I even talked to you anything? And I say friends loosely, like friends, like Instagram friends. Well, no, you never DM'd me before. And I'm like, oh God, this is such a plague. I hate it. So I'm glad that you guys know. And I'm just saying this now to warn everybody here. We will not DM you to get you. That's the only reason I'm telling the story. We will not DM you ever for any reason. Ask you to do anything in Discord, change your Discord settings, none of that. Slack's and I are the only people authorized to DM you. And if we do, it's usually about your account or something you asked us to do. Like, hey, can I get access, or can I get channels, or can I get this or that? We do not reach out to you for any reason whatsoever. I do not go DM people for anything. Never. Once you sign for Rocket Scooter, you're in. I don't need to talk to you, so I won't message you. If you message me, the history of you messaging me will be there. That's how you know it's the right account. So just remember that. HP retest. Just be careful right now. We have an event coming out in 3 minutes. That is kind of making me nervous here, because there could be an event. Michigan sentiment numbers. I don't want to get busted. Keep my finger on the button here. I forgot about the risk. I probably should wait, but I'm very confident that things are going to hold still. And then again, the worst case scenario, DD75, we fall 1 point. That's a $500 loss. I'm still okay. I'm barely on the edge if we fall just 1 point. I doubt that the Michigan numbers, we've gone through CPI, we've gone through PPI. I would be very surprised if the Michigan numbers were a catalyst that reversed the market. I'm not anticipating any big move on the news, as the volatility is very light today on monthly map. The S&P weekly volatility next week is a span of 408 to 400. So there's an 80-point range next week. The SPY's going to get a little bit more volatile over the next month, which could be good for the upside moves if it does maintain bullishness. But this week it was supposed to be relatively light. VIX is in decay as well. We keep an eyeball on that. Yeah, nothing really alarming there. Keep your eyeballs on the light bulbs here. Now the one I always tell the story of the one person, the one friend of mine. I felt so bad for this girl, who got scammed by one of the fake accounts for $30,000. Now again, she wasn't poor by any means. That's a hit for anybody, but the person had always had like a crush on me, and this person actually started sparking like a romantic conversation to breed that trust with this person, and she was thinking it was me the whole time. She couldn't tell it wasn't me, because she's not a first generation American, so her English is not her first language. So she couldn't understand the peculiarities of the person's speaking pattern. Like, you'll know if like you're a native speaker, you can always tell someone's not a native speaker, because the way they use the language is not reflect like some of the idioms and ways language is used. So this person, hold on, wait. This person sounded completely nothing like me. It sounded like a person that didn't speak English pretending to be me, and she couldn't tell. It didn't flow like I normally. So when I read it, it was just such choppy, broken English, but she couldn't tell. And this person actually was convincing this girl he was in love with her, or that she was in love with her, whoever it was. what took it to the romantic side, and this girl fell in love with the fake personality and handed over their money. And when she messaged me, I was so sad because she was like, the hardest part about this whole thing is I thought, I'd always loved you, and I thought it was you, and I thought we were gonna make a life together. I was like, oh my god, that broke my heart. Yeah, no, very much broke my heart. And I was like, so, and that's a real life friend of mine. So, okay, let's be careful here. Resilience is both pushing negative and it's rational. Not good. It's not good. Should probably not take it. I know that I'm expecting that to hold at the bottom side of here. Right? DD is positive, so I really hope that we hold after that gap fill. But be careful on a hedge break. 413 to 412 is basically it. I might have to trim this out because I don't want to lose too much. That was a gamble. Let's just trim down just a little bit. Okay, so DD is still good. Bull side still holds. Res has dropped pretty bad, so this is that resilience compared to hedge push break. This is kind of not a good setup. Hopefully we hang in there. My only saving grace is here. Let's double check UVXY. Any resistance is there. Again, an event is a coin flip. It's gonna hoping we go the right way. Let's read the news. The news probably came in. I don't think it should have any effect, but I'm gonna take a little bit of loss in that first part of the position. My confidence is again pretty low. That's a pretty nasty number on the surface. So in my 10K account, I just bought the dip. I can't do it here though. I just bought the dip at bull zone. We'll see how that works. Pretty low. To the lowest it's been in a while. It's pretty low. We're going to bust this account up. QQQ down at the mean reversion liquidity pocket SPY. Let's pull this up really quick. I'm going to see what happens right here at the open. So with res being negative, we're now resisting here. It can create a hedge break. So DD is going to float. Hedge is going to resist. It's going to get violent here in a little bit. We're at triple B on VIX, so this could be the part that holds the market or part that tanks the market. So be very careful from here. That Qs are falling pretty quick. 2 hedge breaks in a row off of that. Probably should be better safe than sorry. Let me drop 2 more. So 750 would be about $400. This would have to fall really far for me to bust this one. So I'm pretty good just holding something small for now. There's that bull side support. Do we hold there on SPY? That's the question. Oops, where is my encoder here? Oh, there we go. I think I'm pretty okay here on the long side for bull side support. So we're at this place where again, anytime you have an event or a catalyst can cause a problem. Hedge breaks are bad. Clearly below here, it's a no-go. It's out of everything on the long side. DD is going to support bull side there. Hedge is going to resist clearly like that. Resilience less than 0. There's resistance there as well. So if there's anything, it's not looking good. And hedge breaks are always bad, especially when I told you hedge pressures in the redistribution zone. Resilience can forecast a hedge pressure break, which it did. Now, again, the event can go either way, so it is mostly a coin flip, but you can be very careful, like right here on the edge. That's it. Don't hold there. I'm out. Now, it's pretty far for me to bust on this one, but this could just be the mechanics of this day, so I probably should be better safe than sorry. Click that close button in just a little bit. Yeah, long-term inflation expectations are pretty high. Go back to the data. And that's just in trading. You know, trading sometimes you hit a catalyst the wrong way. Expectations 4.5 out of 4. Yeah. The percentage they expect the price of goods and services go up in the next 12 months. As that secondary wave of inflation we talked about. Current conditions is really low relative to the forecast. The consumer sentiment low. Consumer expectations is low. So current conditions, expectations, 2 parts of it. So the consumer sentiment comes in 57 on a 63 forecast. So there's like, it's 2 parts to that number, right? The forecast and the current. 5-year inflation expectations. Inflation's expected to go up slightly. I'm long the dip right now on my 10K challenge account, just on DD. Now again, as we approach here, my trade's likely to there. If we lose this, it's game over for the market. Again, we have DD bands in the way. Hedge pressure breaks on both IWM and S&P. Let's double check this. Yeah, that's just not... Russell just kind of completely disgusting at this point. Going into bear territory. DD's still holding pretty good though. There's still that big tech. Let's look at some of the bigger stocks. So XLC holds at hedge pressure. The hedge pressure close to there. XLK has a little bit room to fall, but in a random spot, I mean reversion. So let's look at some of the big tech here today. Let's see. We have hedge pressure breaks in general, up or down. Down. Second. Had a quick phone call there. All right. A bull zone hold there. Maybe a recovery scalp. Like I said, I'm looking for that. When we get there, we're going to pivot. What's Res is doing. If Res goes greater than 0, then we break hedge to the upside. Like I said, the bull side has been so strong, I'm going to bet on it holding. Weekly expirations too. Yeah, so essentially like the bulk of today's move, we're gonna have a pretty decent 1400 run up for sure. Yeah. It took a gamble, went the wrong way, which it does happen. Not a gamble, but like when you trade into an event, it is a coin flip. More like a gamble's the wrong word to use when trading. The odds are it can go either direction very rapidly. You just can't control it. So all I did was trim my risk to the point that when I hit my stop loss, I could still have one more day to trade in case it does fall. But I am pretty good. If the market does stabilize, I'm going to go back on the long side here. So I am buying the dip in the 10K account. Which I do like. So it's 10K account. I longed here, doubled down there, or actually tripled down there. So what I got here, I really dug in here, and if it touches the middle, I'm going to make a pretty decent chunk today. And that's how you really like. What sucks about these small, funded trader program accounts, you really can't. You don't get that flexibility like you would really trade, which is why the whole point of a trader funding program is to get the eval account to a payout goal to start yourself and seed a real account with it. The rules are just too strict. I can't trade this like I would trade the other thing, like a real trading account. The real trading account is up 2/3 of the way to the 100K mark. So that's from the 10K start. So you get a little bit more flexibility. In general, when you have an account that you can scale. These fixed accounts, you can't scale them. You have to kind of play the game. And unfortunately, in a bear market, it's just not the easiest, most straightforward market to really succeed in a funded program account as easily as you would with a non-volatile, more bull structure based market. And of course, with we being sensitive to catalysts, it just happens from time to time. And every day, you know, an inflation or something comes out, and the market can just drop the other direction. Now, again, we get back above hedge pressure. I'll be real. Resilience goes positive. I'll be very long. Again, I just trimmed just right now, just to have something on the table in case it does support and stabilize. You see, resilience is trying to make its way back up a little bit. I am firmly believing that this is the bull market. Run up till close. I have zero fear of this market right now. We'll see if it proves me wrong. Weekly expirations burning premium on both ends. Oh, 100%. 100%. 100%. Drop some of those premium, those call premiums at 414s. If I were to take a guess, I would like to see this close at 4170 today or higher. We do have an event line. I think we cleared that out. Nope, we didn't. Did we? No, we did. That's the old catalyst line that is cleared. Okay. Oh yeah. So this is a pretty solid setup from here, and that's pretty decent risk and reward on this one. We'll see how it plays out. Resilience being bad though. There's not a lot of momentum yet. This is an all-day commitment. Again, it's gonna take many hours. We have to go through the European close in about an hour and 15 minutes, so that might give some change to this. $39.50 Rocket Scooter accounts. We almost have 4,000 user accounts. It's crazy. We get 10 to 20 a day now. People sign up for Rocket Scooter. It's crazy. We're staffing up for all these projects we're doing right now. second. All right, let's hope that bull side holds. I do like it. Come on, baby. DD's pretty good. It's actually gaining a little bit of traction here. So some of the stocks, maybe the tech stocks themselves, may be holding the bull side. I like. What do y'all think today? Let's take a look at Qs really quick. Unfortunate. Let me double check. There's also a major yellow line here. Let me double check this one. I forgot to mention that. If you guys want to go up here to the top of my screen. This is a run-up yellow line here that has been bouncing around, acting as support for quite some time. This is also a balancing point on a downward yellow line from many moons ago, from the peak in August of last year. So that's that last peak run-up, created a yellow line here. So this is going to be a really strong pivot as well, just on that longer term area. You see these yellow lines love to pivot and play pivot ping pong. That supporting is also a decent sign. Hold on a second. My mom's calling me. Sorry about that. My mom called me. She just got out of surgery. I'm going to have to go over a little bit. Just go check up on my mom later. She's okay. Nothing major. Still woozy from the anesthesia. And her brother and my uncle took her this morning, and she's back home now. So it's some minor surgery, but I'm going to go relieve my uncle this morning after our Zoom call. So yeah, she's good. She's good. Used to get just waiting for that dang cast to come out first. I mean, every day there's something, right? These days seems like there's something every day. So even if you are taking a trade where there's an event that's possible, you just scale your position like I did, you know, buy yourself an extra day. Like I said, even if I bust this elite account, I'll just go get another one and try it again. But the idea is that there's a rule set that I follow, and it's just been unfortunate that each time I did take a little bit of a trade, I'm not getting the good trade that moves the account. I'm either going up 1,000 or down 1,000 or up 1,000 down 1,000. I've been bouncing around 150 pretty much the way that I am, but that's to protect the account. That's not to get the money quick. That's to make sure that the account is protected, so that I'm playing it safe, playing it smart. And then, like I said, the day that everything lines up and the event isn't present or the event goes in your favor, I bet to a degree such that wouldn't blow me out. And that's exactly how I picked the bet size that I did, right? I said exactly what I said would happen. Give myself a little bit of fat. See, it's just control. Like, I know if the odds go against me, how I'm going to lose. Odds go with me, how much I'm going to win. Now, the account, my actual challenge account, this one, is being played with a similar mindset. The exception is I don't have to protect on a minimum drawdown. I don't have to like prevent that. When the market fell on this one, I trimmed my position. I was kind of hoping that resilience would stay and things would look good, but it didn't. The market went slightly against me. But in the other account, I added to the position. I put in something small right here, and then put something big. So now I've got I got a really decent position right here. It's a bet on both sides to here. So this little scalp is a really good scalp for me. Right. Yeah, like Lee said, double down. Double down is a misnomer because I usually go in heavier than my first bet. So it's I bet again. I always say double down because I always think of blackjack, but I mean I bet again, and I usually bet a little bit heavier right at the boundary because I get my cost basis lower. If you bet in the middle, then you only break even when it retraces half, right? So if you bet a little heavier on the second bounce, then when you retrace half, you come ahead slightly. Yeah. So I'm like, as Lee had said, I usually do 1, 2, and 4. Like each time I'll double my position, not it's double my entry, not just double my position. So if I bought 1, it falls some next resistance, I'll buy 2 more for a total of 3. It hits a third resistance, I'll buy 4 more, which is a total of 7. Right? If you stage in a little bit like that, then you really manipulate your cost base. But only if you're certain, not like you're buying when markets are crashing. You're buying when markets are hitting a support or another support or second support. Like I said, I watch people all day long in this group executing with such finesse to how they add to and subtract to from their positions. When y'all talk about this in chat, y'all are so good. I hear horror stories about people going out there and jumping into like random discords, and all it is just people just talk about where they bought and where they sold. No science to how much, no science to how much they add again, buy again. It just seems to be people gambling in a Discord. And the idea that you do cost basis management, understanding your risk, me knowing where my risk was, allowing me to take this fall without going bust, means every decision I make, I'm thinking about how much I can win, how much I can lose every time. Like, I'm never throwing arbitrary amounts. There's a reason I'm in 4 right now. If I fall another 10 points on 4, right? That's just enough to barely hang in there. And I'm not going to let it fall another 10 points. I'm not going to hold the 411, right? So 10 points from here, from 285 to 490, that's another $200. Again, that puts me right over the edge. If I hold 4 micros upside down for 10 points, like if I'm just fall asleep at the wheel and this falls to here, I still don't blow up. So, well, it's not martingale. Like a martingale is an infinite bet. Like anybody that would say something like that's a martingale, again, doesn't understand martingale either. Martingale is with infinite iterations, right? You double down and double down and double down to infinity, such that when the odds go in your favor, you break back even plus your initial bet. So if I start with 100 and then I bet 2, then 4, then 8, then 16, ultimately when I finally win that coin flip, I made the $100 that I initially bet. That's it. So you take infinite in the scenario, like if you understand in engineering, that's something called a Carnot cycle, right? It's a perfect heat engine where no mechanical work was transferred outside of the machine as heat exposed to the surroundings. There was no entropy loss to the environment. So the Carnot cycle is like what they call it's like your perfect boundary condition that the perfect engine exists, and all realistic engines exist inside of them, right? You'll never be able to design that perfect engine. So it's a mathematical, theoretical concept. Nobody should really bet a martingale either. It's a mathematical concept. So the idea that you just double once or double again or triple or whatever, it's a coincidence that they're similar, but you don't infinitely bet. You don't bet to break even either. Anytime you lower a cost basis, you should always bet more. That's the philosophy. A martingale does contain that concept. Every time you lose, you double your bet, but I haven't lost yet. This is all one bet. It's just a bet with multiple places I take the bet. Completely different than a martingale. Because each time in a martingale, you would assume that you would take a bet and lose, bet again, take a bet and lose, bet again, take a bet and lose. I haven't lost anything yet. This is not realized loss. So conceptually, very different, right? But yeah. So yeah, he is just joking, but I've heard people out there who don't understand trading, not you guys, but other people, like critics of my approach. I don't understand. I can't understand anybody be a critic of my approach. The only guy who posts his broker statement on Twitter with the performance stats. 0 other people on planet Earth do that. 0 people. The broker statement plus your performance stats, not just how much you made, but your stats. And my style is very unconventional. It's not what most people do. Most people lose money. And here I am, almost 600% in a recession, right? How am I doing it? Well, probably some method to the madness, right? And occasionally there's a critic, and usually it's a jealous type trade room running, I don't know, indicator selling person who just is mad that we're growing so fast. Somebody once said what I did was a martingale, and they're completely a moron for not understanding that. Not you, but a critic. A critic who runs a very small Discord one time was saying that. How do you do that? I'm like, well, don't ask how. There's a result. Like this, don't knock it till you try it. I'm like, yes, I'm familiar with the betting concept. However, this is not taking 50-50 bets and then take a bet, lose, double the size, lose, double the size, lose. This is all considered one bet with multiple parts to it. So speaking of the multiple parts, it's not really looking super hot right now. But I'll tell you, the best... Ooh. No good. Not good. All right, I am probably gonna trim this. I'm going to give it literally half a second. This is the yellow line right here. This is exactly the yellow line. It's the only place it can support now. Let's look at the futures chart really quick. I'm right on the edge. I think I'm still okay. That's it. So in futures, that's it. That's it. ED is 0.6 and falling pretty quick. There are a bunch of stocks dropping out of that, so we are still 0.6 or higher, which is my right on the edge of irrational as well. I mean, right on the edge of bullishness while irrational. So it's tough. Very tough. You're a chemical engineer, Matt. Oh, it's been a while since you heard Carnot cycle. Yeah. Yes, sir. That's correct. He heard me. He just bust out his thermo book and was like, ooh, these are good. So like you have like a betting, like, remember, yeah, he remembers exactly, like the Carnot cycle is like a thought experiment, right? It's not a physical reality that you can accomplish, but it's a mathematical baseline. You can never hypothetically design better than that. The perfect heat engine doesn't exist, but like by utilizing the statistics or the mechanism of what a martingale does. Yeah. What you were saying is like, yeah, I've had people say, well, why do you add bigger on a loser? That's like a martingale. And people, the only one person that said that in a negative connotation was just to try to sound smart in my stream and advertise their junk services. So it was like, no, that's not what it is. We never use that word here. It's not even a physical thing that somebody would do. You can't physically execute a martingale because you don't have infinite funds to make infinite iterative, or to infinitely, sorry, you can't infinitely bet. Nobody has infinite funds, so you can't physically construct that particular bet, even if you wanted to. It's like a thought experiment in betting. You can double down and double down and double down, but you will run out of money before you hit infinite cycles. So no human on earth has infinity money to actually do one, for it to actually work. If you had infinity money, it would work every time. As long as something had greater than 0 odds and you had at least infinity money, then the martingale will work 100% of the time, or 99.99999% of the time, because ultimately with the odds not being 0, you're destined to win at least one time, and therefore over infinite amount of iterations, you will at least break even plus your initial bet. So no human can create a bet like that. It's weird that internet weirdos come in here like that don't, like, I have advanced degrees and focuses in mathematics and engineering. Like, I understand math. Don't come in here and with your Googling and try to talk to me about math. Yeah, it's fine. So, hey, Jared, where'd you go to school? You got engineering, chemical engineering? I studied chemical engineering. My graduate focus, I was actually originally going to go to grad school and get a PhD. So in my undergrad, I was doing research, the head of the department. So I was his assistant for his grad student. My specialty, come on, hang in there, was catalysis. So I was working in reaction engineering, catalyst design and optimization. So we were creating catalysts, creating catalytic recipes, and then reactor design, optimization, economics. So reaction engineering was basically my sub focus. And so when I worked in the field, I worked as a unit engineer running reactor for Dow. So I actually ran a heterogeneous catalytic reactor. They made acrylic acid monomer. So I was the run plan engineer on that. And then when I was an undergrad, I took a bunch of graduate classes to get ahead for grad school. So they let me take, since the head of the department was my mentor and I was working for him, he let me take grad school classes while I was an undergrad beyond the electives. So like the electives, you could take some grad school classes, but I got to take some advanced catalysis classes and things like that just to aid in the project I was working on. Love the degree plan. It was like one of my favorite things I've ever done in my life. All right, so we are pretty much dead. Okay, let's go. I'm done. DD is deteriorating. So I was kind of hoping the bull side would hold through all of this, but this is not looking good. I'm right on the edge of my stop. And then as an undergrad, I also worked in a program where I would teach a class that was like a program, the scholarship program they had for upperclassmen to teach a 1 credit hour class to underclassmen in an engineering focus. That would be like a supplemental class that goes with the main class you would take. Each professor would elect the student that would teach this subclass at my school. And so like if you were a chemical engineer and you were taking like material science and engineering, it was a 3-hour class, you'd get 1 extra credit hour taking my class with it. So you'd go to the class twice. As an upperclassman, I teach you more things than the teacher would. Like we would practice tests together and go over the concepts and do extra homework problems together and things like that. So we had the student teacher program, and I taught fluid dynamics and material science at school. So I was a chemie nerd for show. That's where you guys saying. Carnot cycle was taught in Intro to Thermo, John W. You guys remember that? The perfect heat engine. Where all energy input is transferred into work with no heat loss of the surroundings. What's up? Oh, I haven't said those words in a long time. Yeah, dude, I'm fucking almost 20 years out of school. Maybe I got my degree 20 years ago. Oh boy. Everybody's like, what's this guy talking about? That's what we were talking about. Oh, I guess you guys remember the Clapeyron equation? Oh my goodness. The Clausius Clapeyron. Remember all these names. Everybody's engineering. There's Clausius, yeah. Y'all remember all that? Yeah, the mission guy, I don't think it's a catalyst as much. Matt, you're right. I think you guys are right earlier. It's more of it's an options bleed. It's just a flush. It's a theta bleed for expiration. I wouldn't be surprised if we rally today and hold up. As long as ZD holds, we're gonna rally. It's just a theta drain. Those days are long over, Lee. Are we in the liquidity pocket? Yeah, liquidity pocket is to drain premiums. Exactly what it is, right? And we're just draining premiums for a while. As long as DD stays the fort, I'm expecting me to at least go this way for the day. But this isn't looking good for this right here, unfortunately. I'm right on the edge. But if it goes much lower than here, the market's going to collapse. So I don't expect it to collapse today, but if it does, it does. So here's all the science behind what we're talking about. It's fun stuff. It's a perfect theoretical concept. So like a normal engine, right, converts energy into work. Like you have a combustion engine, your explosion in your car, fuel chamber explosion, that energy or that pressure energy is converted to mechanical work. Work is a force over a distance. So you apply a force or a pressure inside of a chamber. It's a force over an area. So you have a pressure right? Pushing against something, against a flat area of a piston. So there's a force that pushes that piston a certain amount of distance. So force times distance is work. So your energy is converted to work, and that's particularly what that says. And then of course, all energy will like, you know, anything that has heat, you'll lose heat to the surroundings. So energy is lost, right, to the surroundings in a real system. Wait, hold on, somebody's calling me. Spam. So. Anyways, this is what our classes were like. I remember those days. Thermo was such a fun. I still kept my thermo book. Actually, I kept almost all my books, but I kept my thermo book all through my career as well. Like I took my thermo book was always used, even as I was always whipping out steam tables. My thermo book had so many notes in it. It's still on my bookshelf right now. You did biotech, Lee? Chem and bio? Oh, dude, that's awesome. You know, like, whenever I was a senior, biotech and biomedical engineering was a huge focus in my school. My school was expanding. So, like, our department changed its whole name from the Department of Chemical Engineering to the Department of Chemical and Biomedical Engineering or Biomechanical Engineering, something like that. So it was like a huge, in 2005, like that was a huge shift. When I was a senior, all the freshmen and sophomore in chem engineering, like all of our electives used to be like chemistry based, right? So the department expanded to allow the focus to either go the chemistry side or the bio side. So they allowed electives in biology and biochemistry and other things to count towards your engineering electives. Like I had to take those anyways for my chemistry minor and my bio that I was doing as well at the same time as doing bio. But they started allowing them for chemical engineering electives because you could go the biotech, and they always had the coolest electives. They were doing like, I remember the coolest shops. They were always like designing like prosthetics and stuff like that. I thought it was cool as shit. I was like, damn, that looks like so much fun. I'm just gonna be processing chemicals and oil all day long, but you building like robotic stuff. So cool. Pharmacokinetics and pharmacodynamics was the hardest math you'd ever done when you get your doctorate. So much fun. Oh, what'd you get your doctorate in? Toxicology, so you were doing, so that's basically like the kinetics. So that's the study of the reactions of the medicines or drugs. Are you a pharmacist, Crims? So basically kinetics and dynamics, you know, the motion and reaction kinetics. So you're talking about like the reaction of drugs in the body? Cool. You're UK based. You don't major in the UK like in the US. Was working oil and gas for a while for moving to nuclear. Nuclear makes the biggest bucks, I think, of all the engineering types. At least when I was in my 20s, all the nuclear folks made slightly better salaries than we did. This might go to 410.5. Matt's legit. Thank you. Oh, what's up, Waylon? No one's 100%. Yeah, you can't win them all. The problem is that the funded account thing is always really hard to do. You have to maneuver so tightly. We're in a mean reversion. It's random. Resilience is still in there. Resilience is still good. This is just a theta burn. Obviously, you know, anytime that you're in the liquidity pocket, right, you're burning theta at maximum. So here's a thought. Okay, theta is the highest at the money. Do we understand that? Let me get a picture of a theta curve here. Let me see if I can find a curve. Let me see when we get a guide with visuals. Show you guys a picture. Come on. People that talk options just put too much nonsense on these. I'm going to teach options to somebody. Just give them a very simple graph. Whatever, I'm going to draw it. Okay. All right. 412. Oh, ooh, that's a huge dot. Okay, let's not do that. 412, right? Okay. This option right here. This call. Theta. So basically, it's time to expiration. So like days to expiration, 0. This is expires today. Let's just pick a day like 30. So theta is like that. So it's a curve that says as you're ticking closer. So this is 30 days out. Say I bought an option that expires in 30 days. You're moving this way on the graph. So as you get closer to 0, or I actually do it backwards, I think. Let me get the... Trying to draw the graph backwards so we can see this. I'm just trying to get a picture so I don't have to draw it. Oh, here we go. I found one. Okay, good. Let's go here. I want to draw this stuff. I just want like a pretty picture. There we go. Okay. So time until expiration. This is the value of the option decaying, not the amount of theta you experience. So the value of the option decays like so, and it decays faster and faster and faster and faster as you expire. So in the time value, the closer you're at expiration, theta is the slope is the most. Slope is the first derivative of the change of the price, right? And so with the higher slope, you have a higher rate of change. So any change in theta is going to be very sensitive, and the sensitivity gets even better here. Just timed expiration. Part number 2, they don't draw it in here, but when you're at the money, theta is even the highest. So if you were to draw this same chart, if this, like this curve doesn't represent in the, let's just say that pretend this is what it's like at the money, okay? Theta loss is the highest. Out of the money, in the money, they're just gonna behave slightly differently. But I'm sorry, let's do it actually at the money. Let's just do an example out of the money. Let's do this one first. The farther you are out of the money, the less theta burns. At the money, theta burns the worst. So at the money, 0-day expiration, theta just burns really fast. That's the point I'm trying to draw. I'm butchering this drawing here. Because you have to, this is the value of the option as far out as you are from expiration. And also as far away you are or close you are to the money, you'll have multiple curves of theta. So like the further out of the money you go, you have multiple curves based on like 420 option, 410, 400, etc. And this is like, if this is 390 and you're at 390 and it's a 390 option, will decay the fastest, right? Relative to that. So in a liquidity pocket is the maximum burn of all theta of all options. This is the nearest you are to the money of the calls to the nearest you are to the money of the puts on 0-day. This is burning everybody's theta across the board. All those puts and all those calls right now are out of the money. People are just draining value in options that expire today, being in a liquidity pocket. Do y'all see that? So the fact that we push there and we're holding there is just theta burn on expiration. These options are gonna, most of them will expire worthless. If this market goes to the bull side because DD holds as it's holding, well, they're just shaking people out ultimately before it maybe goes. If this collapses, this would be the unusual expectation with DD being positive. This wouldn't be something. Again, we have the float possibly coming up. So it's hard to gauge. But every moment that we're in here, puts and calls are just bleeding value. Yeah. I think we're still pretty good for here. Yeah, this week has been great for option sellers. The new triple B number comes out on the Tuesday before the third Wednesday. The program you're in was founded created 3 years prior. At the same time, our department changed names. I know it became like a very popular option for a lot of people. A lot of the Kimmies for my class switched like their junior, senior year. They had switched and had to basically start back over with some of the other classes, delayed their graduation like a year or two. When that degree plan became a focus, it was a very popular thing. People were like, "Oh yeah, I want to do that instead," and so people went back to do it. Yep, hedge pusher break. We are in liquidity pocket. This is obviously not a spot to bet on from here. So again, I've been trimming my position. I'm still holding on just a little bit, just in case we end up back here. We'll see how that works. It's going to be an all-day process to get there. Going to bleed theta, fortunately. So that's Halo later. Yeah, let's play some Halo. It is Friday. Well, no, actually, no. I'm sorry. I gotta go help my mom out today. So it'll have to be in the afternoon. Not liking this at all. Yeah. That was unexpected. We're still holding on though. Yeah, this is just... Look at QQQ really quick. Q's hanging on liquidity pocket. Q's are the scary, or IWM is the scary part, because it's moved to bear side. My goal with the ETF was just to show how to get funded accounts. So I got 3 in a row, and then just to try to get my first 10K payout from that and then call it. It's not like a permanent thing I'm going to be doing. So the goal is just to show that process. And not everybody, you don't always win all of them, but it's a quick turnaround. If it doesn't work, it took me 5 days to get the account funded. I can do another just to get back in if it doesn't work. You can't win them all, but the goal is the opportunity cost. You only pay what, $300 a month for the opportunity to make 10K in a couple months period. Not a terrible return on your investment if you get lucky, or I'm sorry, if you get unlucky, it happens. And that's just trading, and you can win them all. You get $1,250 of loss when you start. That's it. All you can do is lose $1,250. Sorry, 12. I said that right. Not 1250. It is 1,148,750. So 1250. I used Elite Trader Funding. So basically, I did 3 back-to-backs on that. If you guys never saw the stats on that, let me show you my stats on these. Now, again, like I said, trader funding programs are a numbers game. The goal is they're the hardest challenges in the world, right? Of your trading relative to your real trading, because you have rules that you wouldn't normally apply to yourself. So, get the stats here really quick. Right here. These are the stats of the different accounts. So, oops, let me put that on the screen here, I guess. So this one only took, I guess, 5 trading days. Or take, that's 8, 9, 10, 6 days, or 5, I guess 5 trading days. I think I carried over on a weekend. So, and we just take it, hit it, 1. I did it again just so people wouldn't be like, well, it was a fluke. I did it again. That's actually, it didn't take me a month to do that. It literally took me 5 more days. I think I just accidentally clicked this month, but it only took 5 days again. It wasn't that long of a process. So 2 of them took 5 days. This one took 12 days. This was a 250 funded account. Again, just nice clean profit curve. Total was $550,000 worth of funded accounts. So I'm only just keeping 1 to try to fish out 1. No shenanigans. The goal is just to make a docu-series on how a trader would utilize a program like that to get their starting bankroll. Like, I'm be the guinea pig for it. It's not to like scrape out a permanent living from a funded account. No trader would want to do that. If they are making money, you wouldn't. Once you start making money as a trader, you start caring about taxes and preserving how much you make. So you wouldn't be profit sharing, right, with anybody if you have your funded account. So like, as I show, I take 10K to trade it to 100K. Right? That's what I'm doing right now. So if you use a funded program to scrape out your first 10K, if you have nothing, like, this is a way that somebody that's just getting started trading may not have, 10K in their bankroll, or 50K or 100K in their bankroll. They may not have anything. They may just have a career with a salary, and they may want to get into trading. So how do you get started? Are you going to go borrow somebody's money, then owe them money if you lose? Or are you going to pay a trader funding program to practice in the attempts to get to where you want to go? And then once you get to 10K, which is pretty much what they give you without the profit split. You take the maximum you can get without the profit split. You'll pay more taxes on it than if it was your real gains, but in a real account. But either way, that's to give you some seed money to get started. So the whole goal is like, here's the journey of a new trader. Here's a way to get funded if you're not funded. It's not, here's a way to get funded and keep using this account forever. It's like, here's a way to start. $300, build up 10. Hell, if you're an experienced trader and you lost everything you have and have nothing left, it's not too hard to get $300 to scrape from the bottom back up to somewhere, right? So that's the whole point of the whole process. Thanks for the knowledge bomb, mate. You've been learning incredible amounts from me over the last couple weeks. Love having you here, man. Appreciate that. I can't believe no university has yet to have a trader degree. Well, yeah, what would they teach, right? I know a university called trader degree that's going to shape you to not be a emotionally weak human being. It'll shape your ass into gear so you can learn discipline, learn things. Called the military. You want to be good at trading, join the military. You'll come out of that learning how to follow rules and control your emotions in Like all the military folks are like, here, you know, you come out of that, your brain is just rewired to be awesome. That's like the best. You learn how to work under, or go be an astronaut, right? Learn how to do complex decision making under fire. Asteroids are whizzing by your head. The sun is blasting you with solar radiation exposure that would fry your skin in an instant. Yeah, do stuff like that. That'll make you a better trader. That's trading university. But yeah, I agree, right? What would you teach people in trading? Charting. You'll teach people like how to read a chart and how microeconomics works. But it's just that would be no different than a generic finance degree. Or economics, actually an economics degree, probably even better than a finance degree for trading. Understanding the relationships in macroeconomics is really good, I think, for traders. But I think a trading degree it's a skill set. Like you go get a degree in being a blacksmith, you train under a master of the craft, and the master of the craft shares it's like a trade skill. Trading's a trade skill. Like no pun intended on the word trade, but it's like going and becoming a millwright or something, a welder. You can learn all you want in a textbook, but until you start working with an expert on something, that's the best way to learn. There's a little bit of artistry and science and all those craftsman type skills. Yeah, you can learn the science of how to make a good weld seam, but what happens if the humidity is different today? You know, like you might have a different effect. You'll learn all the little intricacies that only the master has the experience with. And trading is like one of those things that has to be taught like a master apprentice sort of thing, because there's so much art to it. It's not a rigid science. We try to make it as much a rigid science as we can with the rule-based stuff, but clearly there's a lot of expertise and trust that I have in the market from just the wisdom from the experience. Wisdom is just experience over time and knowledge over time, right? So having the wisdom of, okay, like if I didn't have all my tools in front of me, I wouldn't know what's my fear. Is the market going to just collapse under my feet right now? Or am I knowing that it's probably going to hug here all day and I got all day to kind of watch it? Okay, probably got all day to watch it. Well, how do I know? Well, I've done this tens of thousands of times. The more you do it, the more you get familiar with just the mechanics of, okay, this feels off, right? I've seen everything and I've never seen this before. This feels off. And that just comes from wisdom. And then that's why you have to train under a master as an apprentice. I use Elite Trader Funding, David, the static eval account with ETF. Okay, once you get max without the split, why not just keep trading both prop and personal accounts? Because the prop account is a profit share split from a fund. So I believe they pay you and it's 1099 type income rather than capital gains, as I've been advised. Because this is my first time experiencing the whole process. So you have to think of the tax implications, right? So if it's wage income, I mean, I'm in the highest tax bracket already. You know, my companies make millions of dollars a year. All of them do. So I'm being taxed at the max. So the long-term capital gains benefit that you get from the 60/40 rule only comes from an actual trading account, not from like these paper trading accounts that they pay you from. I even believe that this is 1099 because the elite part of the fund, the elite account right here, elite, is not an actual trading account also. This is still sim trading. That's not really $150,000. Step 2, which what they call, again, they say it's like one step to get paid, but it's not even a live account. They actually have a hidden step. They don't really detail it that easily on the site, but this is how it works. It's a hidden step. Step 1 is the paper account doesn't get paid. You pass the eval, they give you an elite account. This is paying. This will pay me. But this isn't 150 real $1,000 in this account. It's not real $725 I lost. This is still it's like eval with an asterisk. If I make money in this paper account, they will pay me money, real money. And then after 45 days, they'll move you to a live account if you exhibit performance that allows them to move you there. So then you get real money to play with. So in the middle part here, this is they pay you out of their own pocket for paper trades that you're doing. So it's not actual. Not only is it not you doing profit split from a fund, it's not even really trading. That's how they do it. So most all of them have different ways they do it. This is still a paper account on my screen. This is not a real. It's a funded account. Sorry, no, it's not a funded account, but it's a paid account. The lead is that second step they do, and it still pays out. If y'all didn't know that, paper account and they will pay money. Yeah, that's how it works. So so if I make $12,500 in this paper account, they will pay me $12,500 out of their own pocket. That's how they do it. That's how they all kind of do it. They all have ways of still paying you while it's a sim account, different ways. And then when they move you to a live account, some of them have 1 step, some of them have 2 steps. ETF has like one and a half steps because they give you a second eval, quote unquote, but it actually pays you the second time around. But this is, again, because they pay you because it's sim, they pay you from their own pocket. You paper practice trading the sim account still. That's how it works. So while this is the elite is the funded account, as they call it, it's not really a funded trading account. You're still in sim. It's all the little mechanicals. You have to read the fine print of all these companies and how they work. If you don't sign a power of attorney, you're not trading live money. There are only a couple where your orders are actually hitting the market, as Brad said. That's correct. You have to go through the steps where you either become a partner of a fund or a commodity pool. And so you become a partner. So you make that share of a shared pool. So when you become a point where you are in a pool of money and you are trading a portion of money, like you said, you're signing some kind of power of attorney, or you're signing some kind of paperwork where you become a partner of an LLC that has a shared pool of money, you will know, because you will go through the multitude of legal hurdles required to trade someone else's money. Yeah, they don't flip a button and the next day you're trading live money, as Brad has said. 100%. So if you're like, ooh, I got my eval account and now they switched me over, I'm in a funded account, now I'm getting paid. They are paying you from their own cash flow of the subscription money they intake, paying out those who make something and then keeping the rest. That is their business. It's a second layer. Most of them are like this. It's all how it works. Very rarely are you invited to trade real money by a prop firm in this futures prop firm industry. That's how it works. Most of the time, they're paying you from the subscription money that comes in for you to practice paper trade. If you click that sim button when you log into your Tradeovate, it's not real money. Yeah. So you would get like a K1, for instance, if you're getting a share of the company. So if you ever have been a shareholder of any company, an LLC, an S Corp, you would get a K1. Which is all your income, losses, dividends from your share of a company, right? So you would own, like in this particular instance, to do an investment pool as a funded account, you would be a commodity pool. And so you would receive a Schedule K1 from a commodity pool if you were actually trading 150,000 real dollars of a shared investment pool. And you would be receiving a K1 that would state that. If you're not getting that, you're not a partner of the company. If you're trading someone's money, you'll be signing those agreements that allow you to trade someone's money and all that other stuff. You would go through those. You would go through some kind of extra hurdle. So each one of these firms all have different ways that they do it, but most of them is you're still paper trading, even though they're paying you. Karan, update your computer with prop withdrawals. I9 9,000. You got I9 900,000K. You got the. Is there a super secret Intel processor I never knew about? The 900,000. New Intel processors are dope. I have let me I'll have talking computers. I have my computer specs right here. Market's starting to breathe again. Breathe's a good sign. Yeah, most are not going to get to the 12,500 for failing again, so it's just more money for them. Yeah, that's it. And they also charge you a monthly fee to still trade in this account. How about that? They're basically handing you your money back. Like when you go to the elite account, there was another $75 or something you had to pay, remember? There's all tricks to it. The point is the tricks are designed to favor the company, not you as the trader. So if they give you money to trade something and there's no split, get in, get out, you're done. Majority of them are, as Midwest is saying. Some are live money though. For example, Blue Sky is 100% real. Yeah, and you will, like, exactly, they're all different, and that's the whole takeaway, is you have to read the fine print, or even if the fine print's not easily able to be seen, you have to know, kind of what it is. So if this is a paper trading account, they pay you $12,500 from their pocket, it's going to be taxed in the 40s percentile on top of a 20% profit share if you go past that 12.5. So imagine kicking out 60% of your gains. Poof, goodbye. Wouldn't be a permanent solution. All right, I don't like this. This is dumb. Just probably chalk this up to a loss. I get one more shot at this from here, which means I got to be right on the edge to get it. Not good today. Again, I've got the float that can get me going, but yeah, for here, I'm just going to close it out. If we hit the bear zone and don't stay in the middle. Trying to look for anything dynamically that's moved. DD is still coming down again. DD's trying to come down. It's still good enough for me to know that hopefully by the end of the day we end up here. But that's just not fun to see these candles come out like this. Still bleeding that premium. I was excited to see it continue to push back, but this is probably going to be better just to close it. Okay, please let me exit the trade. It's not letting me exit the fucking trade. There we go. Wow, what the fuck? No, don't short. Did y'all see that? Wow. Fuck you, Rhythmic. Trade of 8. That's some shit. Clicking exit, clicking exit, clicking exit. Nothing happening. So I hit sell 3 times and it threw me in a fucking 6 contract short. Losing even more money. That's stupid. Wow. Okay. Y'all see me clicking that button. Did I see the notice? No, I didn't see the notice. Wait, they're going to restore our count in ETF today or what? Wait, say that again, Joe. I was literally smashing exit, 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 and it's not doing it. Then I had to go to sell. And it sold me. I overclicked. Or actually, it buffered. So I hit sell, sell. Nothing happened. I kept hitting it to see it go down, and then it shot me short. And I had to hit exit to cover. That's some shit. Oh. Oh my god. Gonna post it in Discord. Okay. Oh, they're gonna restore the account. Okay, please do. That would be great. How about that? ETF's always been good about helping out when shit like this happens. I love you. I love you guys. Go. Okay, let's check it out. Blech. Yeah, send me a message real quick. Oh, I'm going to get my account restored to the 510 to 512 highs. Oh, great. Well, that's good to know. Well, thanks to the mulligan there on the technical difficulties. Well, no, it's not. Don't blame ETF. It's not them. It has to do with Rhythmic and Trade of 8. It's the technical side. The prop firms have no control over that. It's typically going to be your CQGs and your Rhythmics and things like that. Those are the things that are locking up. The prop firm has no connection to the data feeds. You're going through Trade of 8. Yeah. Go to trading chat. Oh, okay. Thanks, bud. Let me go read it real quick. Rhythmic connection, and this is that's with Apex though. I'm not using Apex. Joe. This is ETF. Are they restoring or no? Let me send them a message. Okay, let me actually just go straight to them and ask them. Although, you know, I did take a legitimate loss from the trade. I don't want them to hand me anything that I don't deserve. I deserve somewhat of a loss, but I don't deserve that much. When I closed right here and then it threw me in a short, they should at least refund at least $300 of that, right? Let's be fair. I'd rather them not take away my real performance, clearly me choosing to exit and being short. I'd want to be fair. I don't want them to give me anything I don't deserve, but they at least should give me that back. Yeah, I'm gonna ask him straight up. We'll see. If I were to take a guess, the Tradeovate brand is probably going to go away at some point, and it's all going to be NinjaTrader. And I don't know what their focus is at this point. More so, is it their platform or the Tradeovate? Like I said, the Tradeovate NinjaTrader's platform is just like most of the other platforms in the futures industry, right there. Designed in the early 2000s, like initial pioneers, haven't really changed much. I need an update. Tradeovate was like, to me, the first major innovation in futures trading platforms that was like a modern, you know, the app feels modern, the platform feels modern, it works really well, it's really clean, it's really smooth. So I hope they don't get rid of the Tradeovate platform. And again, my opinion, it's just my opinion, infinitely better than NinjaTrader's single thread using NT8 dinosaur. No offense, it's like Thinkorswim. It's a dinosaur. It doesn't optimize for the modern needs well. It's very buggy. Anytime you use something on NinjaTrader, you have to watch a series of videos on how to optimize. Everybody sells you a NinjaTrader indicator or something. There's always, you have to tweak the platform and change files and change settings and upgrade your computer. I mean, it's like, you want a nice, clean, cloud-based or web-based application. Tradeovate was phenomenal. So I'm glad when they merged. So I hope they just change the name. Okay, that would be fine. But if they better not get rid of this app. Tradeovate app is awesome. They should take NinjaTrader's technologies and stuff and merge it into Tradeovate, not the other way around. Somebody's talking about Sierra yesterday. I looked at it. Sierra again looks the same way. It doesn't look modern. It looks like a 1990s app. And again, I've never used it, but when I look at it, they just all look the same. They probably work pretty well, but they don't look like they were built, you know, in the last, I don't know. Like I said, there was somebody talking about Sierra yesterday. I've never used it. So, but when I look at the pictures, it just has that. I mean, look, here's the website. I mean, this is now again, not knocking it because of the website. It certainly probably has everything you need to trade with, but I mean, this is your platform, right? These are your inputs, and it looks very, I mean, it looks good. It probably gets the job done, I'm sure, but like I said, this doesn't look cloud-based. I mean, this doesn't look web-based. This looks like it's an application. Probably requires Windows. Probably not a Mac version. I'm not sure. Is there a Mac version for this? Looks like you have to download and install something that's definitely not operating in a browser. Right? Does anybody use Sierra? I mean, it's probably a really great platform. Not knocking it because I've never used it. I'm just saying, as far as, like, you know, Rocket Scooter exists in a browser, so you can use it on a Mac, you can use it on a phone, right? And Tradeovate, very similar, right? So Tradeovate's also programmed in a browser, just like Rocket Scooters. If you didn't know that, this is actually a web browser. It doesn't look like it, but it is. Doesn't matter, like Sierra. It's not. Yeah, I'm saying it probably gets the job done. You know, futures trader doesn't need a bunch of bells and whistles. Like I said, all I need is a DOM and order button. I don't need all the stuff. It's C++. It's very fast. The developers are mean. Yeah. You have to, like I said, I asked somebody yesterday and I said, is it web-based? And the person said, yeah, it's web-based. I don't think that's correct. I've never used it. This isn't, nothing in here looks web-based at all. This looks like a user form. Is it web-based? Can you operate Sierra in a browser, or do you have to download something? Yeah, it's not web-based. Whoever said it was web-based yesterday, we wasted an hour of my time. So I think they were like, I was like, we're the first broker agnostic web-based platform with a server-side vendor marketplace. And he's like, no, well, Sierra does all that. And I went and looked at it. I was like, this looks completely like it's, you download and install something. So it probably is a great platform, not knocking it. But again, the optimization for flexibility doesn't seem to be there. Like Rocket Scooter, when we, as we're polishing and making it bigger and better, you can open up your phone and log in your Rocket Scooter and all your indicators are there. It's web-based, it's all server-based. They probably meant you have to be connected to the internet to use it. I think they were just mistaken. They might have thought it was cloud-based. They probably mistaken the two. So cloud-based clearly means you can log in to an application on multiple devices and still access your user data, which is cloud-based, right? The cloud, like Thinkorswim is cloud-based. Again, you can log in a Thinkorswim app and it remembers the line that I drew on Thinkorswim desktop. It's all stored in the cloud. That's a different thing. But like web-based, meaning that you don't have to install anything, which means, is there a Mac version for Sierra Chart or is it just PC? Can it work on Linux? Can you work it on other? It looks great. I'm not knocking it at all. It looks like a great platform. It just looks old. It doesn't mean it's bad. The oldies are the goodies, but you'll know a different feeling. Like I know people are saying like Trade of 8. Somebody said Trade of 8 needs to fire their development team. I don't think it's Trade of 8. I think it's Rhythmic that is slowing down, and likely so. And I'll explain to you from a developer's perspective. Rhythmic probably wasn't designed to handle this rapid growth they've experienced in the last 2 or 3 years because of the trader funding program explosion. Let's just think about it like that. Rocket Scooter couldn't handle the throughput when we went from 40 people to 250 people, 250 concurrent subs. We basically like quintupled over the course of a month early on, and y'all were crashing the servers. Nobody plans for explosive growth. That's why when your city builds a freeway lane, they close down and not building 20 extra lanes, right? They're building maybe 2 extra lanes. So nobody plans for population to quintuple. So like nobody planned for the trader, because futures was always an ignored part of the trading industry by the average new retail trader. They pretty much went into options or stocks right out the door, or penny stocks. Futures doesn't have a very large online presence or face to the new trader. Robinhood had the face. Robinhood was popular. Webull was popular. What's the futures equivalent of a Robinhood? There isn't one, right? So nobody really cared about futures except for like folks like us. But the last 3 or 4 years, right? Trader funding programs popped up like Starbucks's. TradeBait created a rubber stamp that all you need is a funding source and a website, and you're a trader funding program tomorrow. That's it. There's a rubber stamp. And TradeBait created the model. They created an API, connects your clients, the papers, or you pay for the data feeds, hooks you up with everything. You're ready to go. You're good to go. I can start a trader funding program tomorrow if I wanted to. The abundance of those things brought everybody to futures, which pretty much brought everybody to Rhythmic. And so they experienced a surge. I'm just, again, I don't know this is the truth. I'm just trying to piece it together from what I see. So I'm sure the influx of people to futures has been massive over the last couple of years, and it probably just overloads Rhythmic's capabilities. And so they're probably having to scurry to rebuild infrastructure to handle the throughput they have now. And I think that's probably what it is. I wouldn't blame Trade of 8 or Ninja for it, because they're just, again, it's a service platform. That'd be like blaming Rocket Scooter for our data providers dropping options data. Rocket Scooter has a WebSocket connection. It's collecting data and posting data. We just turn on the water hose. If the water stops flowing, we had nothing to do with it, unless we put in a water hose that was too small, which means we'd have to put in more server power or get more CPUs or more threads or more computers or more whatever. That's one problem we can control if you guys are asking too much data from what the data providers. But the other thing is that the data providers can't handle all the requests. And I think with the abundance of trader funding programs, that's the actual problem. I bet you nobody anticipated all the kids to like futures these last couple years, because the kids love futures, and futures was never a kid's game. And everybody I talked to is doing trader funding programs. It's like a bunch of my friends in the space started trader funding program companies. A bunch of people I know that used to trade penny stocks, and Zach Morris gets pinched. Now they're all trading futures and all doing funding programs. There's Discords completely, shilling for trader funding programs all day long. Big influencers are all doing trader funding programs. They're all hyper competitive now. 80%, 90% discounts, because it's such a saturated market now. That does make sense that Rhythmic wasn't designed to handle that throughput. Now I'm not. So like as a developer, I can say, yeah, they probably just got, it's a great problem to have, explosive growth, but it just probably, the hiccups are that they probably can't handle the throughput. I just think about it like that. Matt should make a platform. I should make a platform then, shouldn't I? Can I get an honest opinion about something real quick? I have to take a quick bathroom break. Have you guys ever used TrendSpider? Like their charting? Do me a favor and give me a quickie review in chat. Compare TradingView with TrendSpider for me as far as charting goes. Pros and cons. Obviously, we white labeled TradingView just to have charts. And charts are just display for us. Charts aren't a bigger part of Rocket Series technology. Charts are just like a novelty for us. But if you had to choose TradingView or TrendSpider, which do you like better and why? Give me some pros and cons to both. I've never used TrendSpider on the surface. I'm buddies with Dan, and so on the surface, it looks like it has a lot more features, a lot more customizability, and I know Dan is one hell of a programmer. So if there's more flexibility in the TrendSpider world, there's a possibility we could white label that environment as our charts, as opposed to TradingView. If we were to ever make that switch, pros or cons, would you like it or hate it? I'll be right back. Okay, I'm back. Learning curve on. Oh yeah, we're back to. Blah. I still have that cough, that itchy cough from the last few weeks. I'm going right. Okay. So the learning curve on Sierra charts is substantial. I'm reading chat. You basically have to learn a new language to accomplish the good stuff. Well, the thing is like NinjaTrader is the same way. Like you want to create an indicator on NinjaTrader, you gotta learn how to program in what C#, I think it is. Or C++, maybe for Sierra. Somebody said that. It was like back then, I mean, that was what was available, right? That was how you were able to do it. And so, learning curve in both environments, I think is very high. I would say I never played with Sierra, but I did play with Ninja back in the day. I mean, I can program in C#. That's not outside of like what I can do. But if you can't, you have to go learn. You have to, even as a developer, you have to go learn a pretty substantial amount of information. This is not DD band, actually. It's down here somewhere. A little bit further. Not a good sign. Nice. Market's looking pretty gross. So yeah. If you have technical issues, you're gonna have to have a lot of problem solving your own. Read through technical posts, 20 pages long, Windows only. Oh, you're talking about Sierra charts still? Windows only. Yeah, like the person yesterday was like, I had to go research, see what it's all about. The person yesterday was like debating me almost on it. Yeah, like I was like, is it web-based? Oh yeah, it's web-based. So I was like, okay. Can it work on a Mac and mobile? Oh yeah, it totally. What are they talking about? It looks like it's a Windows app. I have to download it and install. It doesn't look web-based at all. So it looks to me no different than NinjaTrader's. Like not like company. They're different companies. What I mean is NinjaTrader's application, same thing. It's something you download, you install, and it works. You can open NinjaTrader in a browser, and they appeared at the same time, so it would make sense that they're similar in the way the application framework is done. So they look very similar in that aspect. Windows only. Mad in that engineering problem solving mind, Louis. Oh yeah, trying to find out like who to blame. Yeah, I like to give trader funding programs a go easy on them when this data feed goes out. All they are is a website with a payment portal. They're nothing special technology wise. They're just literally a website and a company, a payment portal, customer service, and that's basically it. Point fingers, it's directly at Tradeovate and Rhythmic connection, and Tradeovate will say the same thing. The data feed, either the pipeline is too small or the servers can't handle the throughput on their data feeds. So like Rhythmic as a company has a data feed that they can distribute that real data to you. Then in the middle, they either are getting bottlenecked or they're doing the bottlenecking as well. So there's two places that the technology has to look. Either think of drinking a milkshake through a straw. If the straw is too small, you can't suck up the milkshake. Either the straw between Rhythmic and Tradeovate's too small, or the straw between Rhythmic and where its data comes from, whatever, straight from the CME group probably, that straw's too small. Or the cup, the Rhythmic cup itself, is not big enough to handle the milkshake inbound, or the spout that pours, it can't handle the milkshake outbound. So like essentially like it can't process the data fast enough to send it for the request, or it's sending it into some kind of internal like bottleneck, something like their servers can't process it fast enough, or the person delivering it to him can't process the request, whatever. But the bottleneck is somewhere probably in there. And what sucks is if you're a trader funding program, as I knew this a long time ago, somebody approached me wanting to start one of these things and wanted me to be an investor in it. And I looked into it, And ultimately, after I investigated the business model, I said, no thanks. Because imagine this. Imagine the bottleneck is with one of those data companies. And you got to go reset everyone's accounts to make them happy. Imagine who takes the loss of that. You take the loss, and it's not your fault. Your cash flow immediately dries up because you just reset everybody for a couple of days because Rhythmic was out. Well, that's a huge hit to like an Apex or an ETF. Imagine losing massive amounts of money for a couple of days. You reset everybody, then that's days of cash flow you don't get. The people that lost on their own just gotta buy. They didn't have to go buy as in like a gimme. They have to go reset their account. $75 fine fees or whatever. Turn up for a couple of days. What if that made you 10, 20, 30 grand a day? So cash flow is the biggest problem in that kind of business because you need that cash to pay out those traders. And then if you don't get that because you reset everybody, then you got to borrow some money. If you don't have it, there'll be a problem. That is the problem-solving engineer, solving these problems. I always try. Well, that's what I always teach people. Like when I'm teaching you trading, you always want to think critically like that. It's just the theory. Like I don't know. I'm just trying to piece it together the best I can. The idea is you have to have an understanding of everything you're doing. You have to piece together all the details to try to get the best guess of why anything's happening. The most efficient way to solve any problem of your own is engineering mindset. A few months ago, Apex got their own Rhythmic server. Don't understand the technicalities, what's been generally very solid since then. I'm not going to begin to guess on the structure of how that all works. As far as a dedicated server, that just, whatever you just said implies that Rhythmic was calculating data and sending it to all people, like multiple threads or multiple sockets from the same server. So if you get your own server, you're not having to share. So an example is if you're sharing, like when you go rent a server, you have the same question. You go to an AWS server, you have the same question they ask. You want a dedicated server or non-dedicated server? Dedicated server means it's only yours. If you're sharing the server space with someone else and someone else gets hacked or gets a virus or gets a DDoS, it shuts the server down. Well, you're going to experience residual problems unrelated to you. So having your own server just means that other people can't cluster up the lanes of traffic or shut down the server. So if they got their own, it just is a testament to what I was saying, is that the throughput is too much. As other companies are probably starting to crowd it up, they have to give people dedicated servers. You pay a little bit more money for that for sure, but at least other people's bottlenecks don't become yours. You always heard from ETF the TradeAbate uses a CQG data feed. Probably. I'm not really sure because like in my ETF portal, it's it has like, it says the word Rhythmic on it. So like I said, whoever it is, I always thought it was Rhythmic, but I could be wrong. I saw the connectivity for it, so maybe it's. So I can get cold in here. You tried Trend Spider once. Okay, that's that question, but didn't take the time to give it a chance, so maybe it didn't intrigue you enough to apart from the platforms you already use. Probably decent learning curve is why. TradingView has Pine script functionality. Do it. You're smart enough and you trade to be the best of both worlds, especially because you want to have it running perfect. I know no one has answered this, but Matt, have you looked at Iron Beam platform? No. For what? For what purpose? Technology platform. Let me look it up. So it's a shell platform. Oh, that looks nice. Web, desktop, mobile, 300 indicators included. Iron Beam looks pretty cool. So that's what I like. Let me look at it. I'm just looking at it here. That looks really cool, actually. See, it looks very modern. Looks like there's a mobile app, web-based, desktop and mobile. And it may be, it kind of reminds me of Trade of 8 Vanilla as well, where it has all the features that you want, right? Charting, watch lists, DOM, things like that, which is exactly what you want as a futures trader. Futures trader don't need a lot of fluff, right? You don't need a lot of junk as a futures trader, especially if you're using Rocket Scooter. We don't need charting, technical indicators, any of that stuff. Complexity, you know, everything's here. Yeah, R&B looks great. As far as white labeling charts, there's really no reason to leave TradingView. To me, TradingView of all web-based charts is the best charting platform I've ever used, except for I've never used TrendSpider, and people tell me it's the best. And they say, well, those two are head for head being the two best there is. So the limitations, or the only reason to leave TradingView would be limitations of what we can do inside of their library. The TradingView has like all the things we dream up, we can't easily do because TradingView limits what you can do. Like some of the design aspects in a monthly map, I can't do. Like we can't easily shade this in. There's a whole lot of hurdles we have to go through just to create graphical functionality because of the limitations of the library. So the idea is if we do hit roadblocks, we have two options to go. We need to white label someone else. Just because, and again, not TradingView. If I were to give it a ranking, fucking 11 out of 10. Like TradingView is badass to the degree of badass. I've never seen a better web-based anything related to trading than TradingView. TradingView, just you open it up and it's good and all the features are there and it's clean and it's fast and it's got a scripting language inside of it. I mean, they did everything right. That's why we went with them. I use TradingView and I go, oh, that's amazing. Let's go. And as we've been programming inside of their library, it's just in the developer side, we are hitting bottlenecks of what we can design. So either we make our own charts from scratch. Well, that's a feat of its own. That's a massive feat of its own. If you guys ever followed the, it's like I've never used TrendSpider, but I've always followed the legacy. I mean, Jake doesn't work there anymore, but Jake used to be one of the big faces of TrendSpider. Jake and I had a podcast before FinTwit was even a thing, back when nobody knew who we were, like 2015. Jake and I used to have a YouTube podcast. He's got like 250,000 followers. He pretty much helped grow that company on social media. And when he started working with them, I mean, seeing what the charts look like back then versus now, huge. I mean, it's like 8 years ago to still keep evolving the platform. The platform is phenomenal. Like I chatted with Dan the other day about what they have, and they have some awesome ideas at TrendSpider, and I'm like, okay, I have a choice to make. Now they don't white label yet, but I told Dan, I go, if you guys white label, I might be your first client if it comes down to it. But I've never used it, and I'd have to go in and use it and check it out to see if I like it. The pros and cons would be, the pros would be, can we have endless flexibility in development as far as creating custom things inside the charts? The cons are, I haven't used it, so I don't know. Jake left TrendSpider, right? Didn't he leave them? Yep, he did. He did leave the company. He worked there for a long time, though. Jake's a very cool dude. If you've ever met him, he's a very, very cool dude. They're all the folks at TrendSpider are cool. They're all super cool. They're super smart. Like you hear Dan talk, he's a gift. He's a gifted human being. He's a very smart guy. You don't think you ever heard anything bad about TrendSpider, but also don't hear much about it to begin with? I think one of the reasons, being that it's a platform that isn't its own broker or isn't connected to a brokerage internally, like it connects to brokers now, I believe, through like the APIs that they've created. I think, or maybe they've Like I said, I don't know a lot about it. But that's just because it's an aftermarket platform. You hear about platforms like Robinhood and Webull and Thinkorswim and E-Trade and all that because you trade through them, right? And then they have big marketing budgets on TV. And but TrendSpider's big on the platform side for sure. You're just not seeing like TV ads, right? But they have a big customer base there, so a lot of people like it for a reason. Like internally, I think what they specialize in is, and this would be another thing too, technical analysis. They wrote code that does automated technical analysis, right? So it like automates trend lines and automates bull flags and automates like your basic TA chart reading and candle reading patterns and stuff. They created some logic that does automation, automatically draws fibs, probably automatically draws, which to somebody getting into charting, that's a cool, like, what's the value? Anytime you're going to go buy a platform when everyone gives it for free, you always have to say, well, what's the value add? I mean, why buy Rocket Scooter when you can use TradingView for free? Why buy Rocket Scooter when you can use TD Ameritrade for free? It's because Rocket Scooter has something those don't have, which would be our tools inside of it, right? And that's particularly why you're here now, is for the tools. And so, like, when I saw on the surface of the TrendSpider stuff, the automated TA is something no one does. And it's a fantastic reason to buy it if TA is your thing. But they don't have like a technology, a trading technology for trading. Trading, they have a charting technology. So trading technology would be like specifically, looking at market maker options, a trading technology. So it's not like a specific. The focus is like a bigger platform, a broader focus for like just basically being like the better mousetrap of platforms. So my question is, since TradingView is basically to me like the pinnacle of web-based platforms, if you guys did use TrendSpider, is it look and feel the same? Because if there's more flexibility, that's the route we would go. And then we get all those cool features of that automated TA and stuff that would probably come with it if they did it. So it would be like more flexible for us to develop inside of a different environment. So somebody says TradingView has Pine script. So do they have a scripting language inside of TrendSpider that would come with? Like I said, I don't think they white label yet, but like I said, I'm going to convince. If y'all like it, I will do everything I can to convince Dan to let's do it. If it debottlenecks some of the things we want, if we hit hurdles in what we want to develop, just because as awesome as TradingView is, there's limitations on how far we can push it. We don't want to go create charts from scratch. I mean, that's why I brought up the story from earlier, watching TrendSpider evolve over the last 8 years. I don't want to spend 8 years building charting technology that's superior. I just want to buy the superior charting technology from them and use it. I ain't no patience to build charts from scratch. That is a monumental feat. To work smooth and look good and all that, God, I can only imagine how much effort went into building that. I don't want to do it. So Michigan, long-term inflation expectations the highest since 2011, and second half of 2011 was terrible for equities. Yes, it was. TradingView is superior in your opinion. TrendSpider is clunky and confusing. The alerts are awful. Well, my not about the experience of the whole company. Now let's just start over. I'm reading your comment when you said that. Just the charts, the charting. That's it. This part right here. Don't think of anything else around it. We're not building anything else from anyone else. We're going to use a DOM. We'll probably use the TradingView DOM. Order input we'll probably use from TradingView, and then the charts. Like the basic platform stuff we don't have to design. Everything else around here we built ourselves. We're just using TradingView's charting technology inside of it. So I guess let me rephrase, not the experience of just using the platform yourself, but the experience of the charting. Is the charting good? Is it really nice? Yeah, so we won't be using like their alerts or their scanner or back testing or any of that stuff. Has anyone used TT, Tasty Trade? So or trading technologies? I've never heard of it. Is TT Tasty Trade or trading technologies? Which one? Anybody use Motive Wave? I've never used that either. You think TT is the most advanced you can get? I wonder if you can program rocket scooter rules in the algo with TT. So let me rephrase what we're doing. We're not, like the person yesterday was, can you create an API so I can get your signals inside of Sierra charts? Absolutely not. We're never going to take our stuff and broadcast to a competing platform. By saying using TrendSpider, we're not going to be broadcasting our stuff to TrendSpider clients. We would be white labeling their library to put their platform's chart inside of ours. We would basically bring theirs here. That's why when people say, oh, can I use Rocketseer with my TradingView account? We're 0% connected to TradingView. 0%. TradingView lets us take their car engine and build a new car with it. We can put whatever wheels we want, whatever doors, paint whatever color we want. And we can create a car company and sell that car, even though it's got the TradingView engine inside of it, right? So the idea would be, I'm exploring possibly getting the TrendSpider engine under our car so we can have more flexibility to build, including a scripting language that's not PineScript. If they go a direction and create a scripting language, which they don't have, it wouldn't be PineScript. A little bit different. And help us make a better decision for what we want to build in the future. $1,600 a month for TT. What is that, Bo? That's how much you pay as a user? Or is that like an enterprise fee? That's a lot for a user. Hey, back in the bull zone? Yeah, I think so. DD is certainly hanging in there. And though it's looking kind of booty, it's still hanging. TradingView is definitely the king. Only place you prefer to turn on. My goal in building our platform is the interconnectivity. Like building charts from scratch, not interested in. The features that we want to build, interconnectivity from our platform to the other things we want to build, and of course our technology inside of a platform is the main focus. The basic pieces we don't want to redesign. We don't want to redesign a wheel. We don't want to redesign an engine block. We don't want to redesign a gear differential. We just want to create our rule assist mode in our risk management based platform with all the rules and stuff we're building with our marketplace. So imagine if I were to stop the Classic app. When we designed Classic app, this is where we were planning on stopping a long time ago for you guys wanted charts. I was gonna have this guy automate trading for me at some point. Back to the bull zone. I'd like to think so, as long as CD holds it for it. Oh, you said trading technologies. No, I've never actually looked at it. Overkill. Okay. Archie says the charting is good. The rest of the FTs are mediocre. This is not a decision we'll be making this year. Honestly, yeah, like I said, TradingView 11 out of 10. I have zero complaints about TradingView. This thing is by far better than anything I could ever make. And I know the amount of effort it goes because that's why I told the story about Jake. I remember when Jake originally wanted to work for TrendSpider, for TradingView before he joined TrendSpider. I remember hearing about that. So they both kind of started pushing at the same time, the technology, charting. And they, like I said, it's a tremendous effort to build charts from scratch. And that's why I don't want to do it. And someone else do it, and we'll just pay them to use their stuff. we're exploring so many different pivots right now. The problem is there's so many things we want to do, and everything's waiting on a decision from something else. And it's like there's no real easy sequential way to do A, B, C, D, E. We have to do almost all of them simultaneously. Everything that we're going to turn on requires something else to be on, which requires something else to be on, which requires something else to be on. It's continuously. We need futures broker to get futures data feeds. We need futures data feed to power some of the tools and indications you need. Those tools and indications that we want to do may not be able to be programmed as beautifully as I like them. TradingView. So I'm like, okay. We gotta, on paper, tie everything together and make sure we design where everything's possible once we push that way. My thought is I have to find the limitations of what we can do. And if we are going to bump into any future hurdles, I need to know that now. Dang, market. It's not looking too hot today. Oh, Spider's in the bear zone now. I didn't even notice that. Holy shit. I'm not even paying attention. Shocking too much. Okay, guys. I'm gonna probably call it a day. I'm gonna go see my mama. Am I a partner with ETF? Nope. No partnership. No partnership, no affiliate. I get paid no affiliate money, no affiliate revenue from anybody, and I never have taken a single affiliate dollar in my entire life, nor will I ever. That's a piece of integrity I'll always stand on. Nobody pays me to promote a product, and I'll never be a paid advertiser for a product. We explored partnering with ETF, but ultimately both companies decided like not partnering to make an income or make a revenue share, but like a cross collaborative type partnership. Maybe you can trade your ETF inside of Rocket Scooter by being able to trade Trade but since that wasn't possible, Rocket Scooter lost interest in any kind of partnership. Yeah, cool. The way we were exploring doing it would be that like ETF would have their service, and then of course, you know, they say we have educators we work with. Here's Rocket Scooter, and then in Rocket Scooter you would be able to log into your ETF account and also trade through it. But Trade is kind of operates these days like Apple. It's like a one-stop shop with an iron wall around it. You do everything internally. They don't like developers. Since they merged with Ninja, developers don't have a lot of entry points into Trade they used to, so we wouldn't be able to trade through Trade the same way here, like connecting a Rhythmic to your Trade inside of here. So it was like, It would have been kind of cool though if you could do your trader funding program inside of Rocket Scooter. So that would have been really cool if we could do that. Fortunately, Trade is the one who acts as and makes that decision. Jigsaw makes world-class DOMs. I've never checked out any of Peter's stuff. I've chatted with him a few times, but I've never checked out his tools. So Rocket Scooter newsletter gives us updates on monthly maps. We should do a newsletter. We actually talked about that a while ago. I'm gonna bug Ashton, get him to make that. But the futures data and Rocket Scooter, working on that now. I had a meeting on Tuesday and a meeting yesterday or Wednesday. Futures is a two-step process. Number one is we're getting connected to a bunch of futures. Number two is we're officially partnering with the futures broker. This will allow you to both receive data, send orders, and receive brokerage services using Rocket Scooter and our partner. So that's a more complex project too. We have to tie so many things together, and it's just getting all that done. Originally, we were going to do something on our own. Instead, the whole that, like I said, I'm not. Over the course of the months, the original plan I was going to do. Remember back in February, I said we're probably going to turn it on within the month. I intercepted that with a better idea. Instead of me connecting you to a bunch of FCMs, an API, instead I'm going to connect you through a broker where you'll have brokerage services. You'll have a number you can call to talk to a broker. You know, you have a better experience than just connecting to like a Philip or a Dorman or something like that, which may not have a brokerage service that comes with it. You know, you'll pay, just like you want to call, you trade Tradeovate, you call Tradeovate, you have tech support, customer support. Those things I think are more important than us just connecting you to your trading account to let you trade. So that took a few more months to get us patched in with a really quality broker. So that's what I'm excited about, is you'll have brokerage services, outbound orders, inbound data, all going to be lumped together. So that is coming. That's actually starting. Intensive bootcamp idea. It'd be nice if we could have one. Sure, a lot of new members like me can benefit from this. To reboot the bootcamp, it's been interrupted so many times. Like to start it over by me traveling and just all their stuff. I am very much planning on, and of course all these meetings of all these things we're trying to tie together has been taking a lot of the daytime. But starting over from A to B bootcamp, it's about time to do it. What I think we'll do is maybe at our 4,000th member, we'll have our 4,000th member spectacular. Here we're gonna we'll reboot the bootcamp. I'll actually write it down in stone and commit to a 3-week, 4-week boot camp. That'd be great. I'd love to do it again. If y'all were here for the first boot camp, y'all fun. That was really fun, right? The new DOM and Bookmap is good. Was created by other developers. Bookmap license it. I'd have to check it out. I've actually never used Bookmap either. Okay, I'm gonna bounce. I love you guys. We'll see y'all on Monday. Hopefully maybe they'll give me like $300 back or whatever of that loss because of the hiccup with the data feeds. We'll see. If so, that's cool. If not, that's cool. We'll figure something out. Love you guys, and we will catch y'all on Monday. Y'all have a great weekend.